Good morning and welcome. You're watching Market Cafe on ET now. It's a truncated week of trade, but it's on the back of good, solid gains across global markets, including the Indian market, which rallied 1+%, very close to that 17,500 mark. Now the SGX Nifty, you can see, up 0.1% in very, very early trade. But Ankita, she takes us through all that's happening in global markets. Sorry, forgot to introduce my co-anchor, Ankita, and myself, Harsh. Ankita, talk to us about how global markets are doing. What should we look forward to with this
So
year?
good morning to you, Harsh, and good morning and a happy Monday to everyone. But global market cues seem pretty strong. A good global handover coming in. Like you mentioned, Nifty also ended the day somewhere around 17,500. So good positive numbers coming in from the global cues as well. Stocks rose on Friday and on Wall Street as well. That wrapped up a really volatile but a winning quarter. Now the S&P 500 added 1.4%, Nasdaq Composite advanced 1.7%, and the Dow Jones Industrial Average gained 415 points or was up 1.2% in trade. Now, the reason for that was that Fed's preferred inflation gauge, which is of course the personal consumption data, personal consumption index, that showed a cooler than expected increase in prices. Now that is called the core personal consumption expenditure index. That was 0.3% in February, less than the expected 0.4%. So because of that, of course, because of the fact that the inflation is cooling down now, the interest rate hikes are playing out, the markets rallied. The S&P 500 and Nasdaq were up 7% and 16% respectively for the first quarter. It was the best quarter since 2020 for the tech-heavy Nasdaq at least. And for the month, S&P 500 and Nasdaq gained at 3.5% and 6.6% respectively. Now, the Dow Jones advanced 1.8%. So net, a positive month and a positive quarter coming in there for all the three major indices. Let's look at the European markets as well. European markets also closed higher on Friday. The Eurozone inflation, headline inflation slowed to 6.9% in March, down from 8.5% in February. So inflation cooling down there as well, and that's the sharpest fall apparently on record according to Reuters. So all interest rates playing out well there, and the core inflation also increased from 5.6% to 5.7%. Now remember that core inflation also includes the food and the energy prices. Now also there was a drop in Germany's retail sales, and in the UK economy recorded 0.1% growth in the fourth quarter of 2022, revised up from the first estimate showing that there is no growth. So there is positive cues coming in from the UK as well. Now the Pan-European Stock 600 closed up 0.6%, DAX was up 0.6%, FTSE up, marginally up, was up 0.1%, and CAC was up 0.8% in trade. So good positive cues coming in from the global markets. Harsh, tell us, something happened in the crude also overnight. OPEC Plus did something that surprised the markets. Harsh, take us through what happened.
Yes, it took away around 1+% with regard to the total production of crude daily, around 1.16 million barrels of oil taken off the crude market, and that's a bit of a surprise, right? I think even markets were caught unawares on that one. In any case, the OPEC Plus had cut production by around 2.5% of the global production, which is around 2.5 million barrels, and we had 0.5% of a deficit coming in from the Kurdish issue. So we now have nearly 4% of the total crude production which is off the market, and that's the new event of that is just 1+%, but overall it's 4%, and you have seen a surge in crude. In fact, crude is up 5+%. Yes, you heard me right, 5+% in early trade today. We are seeing the WTI, which is at just below $80 a barrel, and we are seeing Brent, which is just above $84 a barrel, at least at the moment. So good strong moves made by crude.
Right, like Harsh mentioned, markets were caught unaware, and a good sharp up move coming in on crude as well. But let's look at the events that we need to keep a track of in today's trading session. We have the March auto sales numbers that will be coming out today. We have Radiant Cash lock-in period that opens on the 6% equity. We also have Team Lee's buyback record date, which is today. And of course, we have the IPO, the Avalon IPO that will be opening up for subscription as of today. Now, remember that tomorrow is a holiday. It's a market holiday, but tomorrow Credit Suisse is going to hold its annual general meeting that we will be tracking and coming up with the updates thereafter. Of course, and after that, on the 5th of April, we have the UBS annual general meeting in BHEL. On 5th, we have Vedanta, which has the last day to be eligible for dividend. So keep a track of that. Eyes on Vedanta. And on the 6th of April, of course, the important RBI interest rate decision that is likely to come out on the 6th of April that we will be keeping a track of very closely. Also, Harsh, tell us what is the news besides, of course, the sharp moves coming in on the crude. What are the news that made headlines globally overnight?
Well, yes, let's quickly move to, in fact, stock-specific global stocks. Global fast food giant McDonald's is reportedly closing its US offices this week as it prepares to inform employees about layoffs undertaken as part of a broader restructuring. The company asked employees to work from home over an internet email last week. What's still unclear is the exact number of employees that will be laid off.
And car maker Tesla delivers record quarterly vehicle deliveries. However, sales growth moderated despite price cuts as rising competition and a bleak economic outlook. Company has reported 4,22,875 vehicles for the first 3 months of this year, up 4% from the previous quarter. This was also 36% higher than the year ago.
Well, and in the latest on Credit Suisse, Swiss prosecutors have launched a probe into the takeover of the lender by rival UBS. Switzerland's federal prosecutor is looking into potential breaches of Swiss criminal law by government officials, regulators, and executives at the banks.
And the International Monetary Fund's Executive Board has approved a 4-year loan program of $15.6 billion for Ukraine. This is a part of the global $115 billion package to support the country's economy as it battles Russia's 13-month-old invasion.
Well, and former US President Donald Trump made the news as he has been indicted by a grand jury in Manhattan in the alleged hush money case. He is the first former US president to face any criminal charges. So what are the exact charges and what lies ahead of him? My colleague Stacey Pereira is here to tell us more.
Well, that's right. Former American President Donald Trump is in the news once again, albeit for a different reason this time around. Trump has become the first former American president to be indicted in a criminal case. This after the grand jury decided to criminally charge Trump for directing hush money payments to a porn star during the 2016 presidential campaign. So what exactly is Trump being accused of and what really happens next? Well, it all goes back to July 2006 when Donald Trump was then just a real estate tycoon who met with adult film star Stormy Daniels at a golf tournament. What happened next is a bit controversial and there are different versions, one could say, of the same. According to Daniels, Trump's bodyguards had invited her to have dinner with Trump in his penthouse. The two allegedly then had a sexual encounter, descriptions of which are detailed in the book published by Daniels in 2018. However, Trump has gone ahead and denied having any of these encounters with the adult movie star and has instead accused her of extortion and also calling it a total con job. Now, the sequel to this story begins in 2016 when Trump was declared the Republican candidate for the presidential elections. Now, this is when Trump allegedly paid about $130,000 to Stormy Daniels to keep her from going public about the sexual encounter. Now, this is an alleged allegation and, well, apparently Trump's personal lawyer, that is Michael Cohen, was the one who paid Daniel through a shell company. Now, the hush money paid allegedly was then reimbursed by Trump, whose company, the Trump Organization, is the one that logged that reimbursement as a legal expense. Now, the payment was then revealed by the Wall Street Journal in January of 2018 and actually forms the basis for all of these charges that Trump has been indicted for. As for now, it remains unclear what charges would Trump actually face. The charges approved by the grand jury are not currently public. But reports suggest Trump would be charged of falsifying business records, which can be a misdemeanor or a felony under the New York law. Trump is now expected to surrender to the Manhattan's DA office and appear in the court sooner. However, neither of the indictment nor the conviction could prevent Trump from running for the presidency in 2014.
And well, with that, it's time.
We'll quickly move to the news on the domestic front, and on the domestic macro front, the GST collections have been robust for the month of March. They've come in at 1.6 lakh crore. This is the second highest collections ever clocked in after April of last year, on last 2022-23 financial year. So a couple of months of very good collections coming in to start the year as well as to end the year. My colleague Prakash is joining in on the phone line to put the numbers into perspective.
Yes, the Finance Ministry has released the GST collection numbers for the month of March, and as per the Finance Ministry release, it was approx 1.60 lakh crore. It's the second highest GST collection number since inception of GST. Only after GST collection, which was highest ever in the month of April last year. Apart from that, as per the Finance Ministry data, the monthly GST revenues. As per the data, it is 1.4 lakh crore monthly average GST revenue of 12 months in a row. It's a good indication that the revenue collection through GST is being stabilized and it is growing day by day. Apart from that, 1.6 lakh crore GST collection crossed for the second time since inception of GST, and it is 13% growth year on year if you compare with the last year. So it's a big development as far as the revenues from the GST collection are concerned. It's and if you talk about the full year GST collection in the financial year 2022, it is approximately 18.1 lakh crore. It's a big number because after completion of 5 years GST, a lot of reforms measure has been taken, and after that the GST collection seems to be stabilized with the time. And the average GST collection, if you talk about the every gross GST monthly collection for the full year, is approximately 1.51 lakh crore. So these are the number which shows that the GST collections are stabilized now, and with the lot of reforms measure have been taken by the government, and some reforms measure which was with regard to plug in the gaps, the leakage, that has been stringent now, and we can only hope that the GST collection may grow further going forward.
Right, then moving on, Saurabh Mukherjee of Marcellus Investment Managers has doubled his position on select pharma names, as also sees value in Prudent Corp and InfoEdge. He also shares his views on a bunch of other stocks across the sectors. Listen in to what's made it to his list and his portfolio.
So in Divis's case, if you look at the business today compared to where they were pre-COVID, the business is around 30% larger. Revenues are 30% larger. You see Divis incredibly well positioned. So through November, December, we doubled our position in Divis. Coming to Dr. Lal PathLabs, somewhat similar, right? If you look at operating margins, they are higher today than they were before COVID. And this talk about comparative pressure, I think, is a lot of nonsense. And we see Dr. Lal nicely positioned. So July, August, we doubled our stake in Dr. Lal. So I think we haven't added Tata Elxsi in our mid-cap portfolio. That was our last big addition. You flashed on your screen. We got out of Relaxo and added Tata Elxsi around 3 months ago. The other addition we've made in our financial services portfolio is in the midst of this mayhem around capital gains tax on debt or income tax on debt mutual funds. We've added Prudent Corporate. Prudent is a wealth manager. It's a wealth management platform for the IFA community. We've added that to our Kings of Capital portfolio. And as I've said in the past, we keep looking at Nykaa and saying, are they in that space? Has Nykaa built a platform? Has Falguni Nair and team, have they built a platform which is distinctive, which is unique? There are elements to what Nykaa does which we think are very clever, very unique, but I think they could do more on the tech platform. yet to find too many digital businesses in India which have distinctive capabilities. InfoEdge remains in our mid-cap portfolios as one such business. I think the Naukri platform is utterly unique, and the PC business that Sanjeev Chindani and team have built using the cash flows from the Naukri platform is a very clever way to monetize the free cash flows coming out of Naukri. So if somebody else out there builds a Naukri, builds something akin to a Naukri, a distinctive, unique business, we would love to invest. Because our only conventional FMCG play is Nestle, because it's not possible to sell baby milk powder, D2C. It's a very difficult industry to enter. There's licensing, there's restricted selling, and therefore Nestle remains our core FMCG play. The rest of the FMCG plays, I think the moats are eroding as D2C comes of age in India.
Right, that was Saurabh Mukherjee. Let me quickly move on. One piece that will make news, of course, going into the summer is the hospitality space. The summers are here, which means it's time to bask in the sun, gorging on delicious meals, sipping on chilled drinks, while soaking in scenic views. ET Now's Aishwarya Patil filed this report on how this summer will turn out for the hospitality sector.
Basking in the sun, gorging on delicious food and sipping on chilled drinks while enjoying the scenic views. Just the thought of a holiday keeps you wanting for more. It's the summer of 2023, and while the rest of the world is under pressure due to the slowdown, the hospitality sector is an outlier. It's back with a bang post the pandemic and is hiring in full swing.
In the post-COVID era, people are willing to spend more and more money on experiences than on possessions. So clearly we are seeing that as a good trend and augurs well for the hospitality, tourism and the aviation industry. If you look at our hiring plan based on the budgets that we have set ourselves for the year 2023, calendar year 23 or FY24 as we call it from the financial markets perspective, we are expecting to hire about 500 odd people into the organization across Thomas Cook and SOTC.
The hospitality sector is a huge employment generator. Recovery in the sector will mean a 7x multiplier effect. To put that in perspective, experts from the industry believe every time a single holiday booking is made, it provides employment to almost 30 people. Uptick and recovery in travel means there is a much needed relief for the gentlemen and ladies that take care of you on ground at the airports, in flights up there, on roads, and of course, from the concierge to the kitchen staff at the hotels. The list is unending. And now major hotel chains are getting ready to expand. IHCL or Indian Hotels, for instance, plans to expand its hotel portfolio in the next couple of years across India. And things are looking up for the company.
Post-COVID, we've seen a resurgence as far as our occupancies and ADRs are concerned. I'm glad to let you know that over the next 3 years, we'll be adding on another 50 hotels to our existing portfolio across all brands. We are looking at an average sized hotel of about 100 rooms. And if I look at, let's say, almost 100 employee per hotel, I'm looking at 10,000 employees.
But what really are the growth factors that are driving the industry? The first one being a healthy recovery in domestic travel from pre-pandemic levels. Most hotel players in India have indicated that demand has outstripped supply. The second is the G20 effect. India assumed the G20 presidency from December 2022, which lasts until the end of 2023, which means more inbound travel, more foreign tourists, and certainly a golden ticket for the travel and tourism sector. And finally, to top it all, we have a sport that not only binds India together, but also gives a boost to the hospitality sector. And looks like a series of sixers are lined up for the industry. Well, the hospitality sector was the worst hit by the gloom and doom of the pandemic. But it's about time that the industry sees a ray of sunshine.
Well, we see the hospitality industry picking up with revenge travel back. Harsh, are you traveling anytime soon though?
Yes, I am.
And so am I.
Coincidentally.
Coincidentally.
But yes.
So that really corroborates Aishwarya's story.
That's correct.
And with that, it's time.
Piece of the moving puzzle at the start of every month, and we're at the start of the financial year, is that the auto sales data for the month comes out, and it's a mixed bag this time around. My colleague Lisa is here with the fine print of those numbers. Lisa, good morning.
Yeah, good morning. BHEL Pharma has announced a massive rights issue, and the issue size is around 1,050 crore. Well, this is on BHEL Pharma actually. So as per the management, the rights issue will be completed in Q2 FY24, and since the demerger, the BHEL Pharma has been a wealth destroyer, and it has listed at around 200 per share. Since listing, it's down 66%, and the fall from the year has been 40%. Well, the reason for this fall has been that the price discovery post demerger has been on the back of weak Q3 results and lukewarm response given by domestic institutions. The recent triggers has been that the low freight rates that will help to aid in the margin, and also the valuations may turn attractive on the back of Jefferies coming out with the report saying that CDMO business is expected to improve from H2 FY24 onwards.
All right, then we'll quickly go across to Vamakshi, who's waiting for us with all the brokerage notes that are coming in this morning. Vamakshi, tell us, what are the stocks that we need to keep an eye out on? What are the brokerages saying this morning?
Well, absolutely. Let's first start off with some of the gas stocks that will be in focus. We have a note that has come in from Citi. They're highlighting that the government has kept the prices largely unchanged at $8.6 per MMBTU for now. The continued delay, however, could create a near-term overhang over gas stocks. The top gas pick as far as Citi is concerned is GAIL, as it also happens to be a key beneficiary of lower APM gas prices. They continue to view the stance of the government for the CGT sector as quite favorable, and on the back of that, they also prefer CGD players like MGL and IGL. Apart from that, we also have a defense name in focus. Bharat Electronics has been grabbing headlines lately, and today also it will be in focus on the back of this brokerage note that has come in from CLSA. They're highlighting as that what they're highlighting is the fact that reigning MII orders close finally, and BHEL is in fact winning the largest chunk. The company also recorded the record turnover for the financial year 23. They helped BHEL report order inflows of nearly $2.5 billion US, and on the back of all these positive factors, they've actually raised their target price from 105 per share to 115 per share, maintain a buy rating on BHEL. And lastly, we will be watching out for PB Fintech. CLSA has come out with a report, and they're highlighting is that the asking rate is too high for the base platform. New initiatives cannot be a game changer as of now, and on the back of these factors, they've actually downgraded its rating from buy to outperform and given a target price of 710 per share.
Well, and moving quickly on, thank you for that, Vamakshi. The government's revenue from disinvestment and dividend by the central public sector enterprises has exceeded the revised target for this fiscal year, despite deferral of its plan to sell stake of Hindustan Zinc via the OFS route to the next fiscal. Now, the government has realized around 94,000 crore in FY23 against the revised estimate of 93,000 crore, as dividend proceeds offset the shortfall in the disinvestment revenue, showed data released by the DIPAM. My colleague Prakash has actually filed this report earlier. Have a look.
The government has exceeded the combined revised estimate target of disinvestment and dividend for the financial year 2023. As per the data released by DIPAM, government has received rupees 94,282 crore as disinvestment and dividend proceeds from CPSEs till 31st March 2023. Out of rupees 94,282 crore, government has received rupees 58,988 crore as dividend amount, and rupees 35,293 crore has been realized from divestment of CPSEs. Eventually, government is exceeding revised estimate target of rupees 93,000 crore for the financial year 2023. However, when it comes to number that has been received from divestment of CPSEs, which is still below than the revised estimate target of rupees 50,000 crore, which was rupees 65,000 crore at the beginning of the financial year. But the overall number is higher than the revised estimate target of rupees 93,000 crore, especially due to the fact that higher receivable on account of dividend from CPSEs, which was rupees 58,988 crore against the revised estimate target of rupees 43,000 crore. That means, shortfall in numbers that is coming from disinvestment is largely being offset by the higher dividend numbers. But one important factor that should be taken into account is that government is exceeding the target of revised estimate without divesting its residual stake in Hindustan Zinc through OFS route.
And well, it's that time of the show where we get you all the stock-specific news and all the stocks that you need to keep an eye out in today's trading session. And for that, we have Ashesha in the studio. Good morning to you, Ashesha. So tell us, what are the stocks that we need to keep an eye out for in today's Monday's trading session?
Hi, good morning. So the quarter has ended, so operational updates have started coming in. First up, we will have Apollo Tubes, APL Apollo Tubes in focus, and this is on the back of operational update that the company has given. They've recorded strong quarter 4 and FY23 record sales volumes. As far as sales volumes for the fourth quarter are concerned, they've risen by about 18% on a year-on-year basis, and on a quarter-on-quarter basis also they've risen by 7%. As far as FY23 sales volume are concerned, we've seen an uptick of about 30% on a year-on-year basis. Moving on to banking companies then, where CSB Bank deposits are up 21.4% on a year-on-year basis. Gross advances meanwhile have also seen an uptick of about 30%. Karnataka Bank also reported operational data where gross advances have seen an uptick of 6% on a YOY basis, and aggregate deposits have seen an uptick of nearly 9%. GR Infra Projects will also be in focus, and this is on the back of order wins. The company has received letter of award for a project for construction of 6-lane greenfield project. The cost of this project stands at about 1,248 odd crores. Apart from this, separately, they have also received letter of award for a project, the cost of which stands at about 848 odd crores. Moving on to NCC Limited, order wins coming in over here as well. The company has informed the exchanges that they have received 5 new orders worth 1,919 odd crores. BHEL, and this is because the company is in receipt of LOI for supply of defense equipments from defense forces to the tune of 3,700 odd crores. Lastly, Dilip Buildcon and Ashoka Buildcon will also be in focus, and this is also on the back of order wins. Dilip Buildcon has received letter of acceptance for HAM project in the state of Andhra Pradesh, the cost of which stands at about 740 odd crores. And for Ashoka Buildcon, it is an order from the Ministry of Railways to the tune of 285 odd crores.
Right, thanks so much for that, Ashesha. But the other piece-making news is the fact that prices for electricity have started to catch up with inflation. 5-20% hikes across electricity prices across Bombay definitely going to impact your wallet and mine, Ashesha. Talk to us about what that impact means.
Well, yes, prices of electricity have been hiked by 5 to 10% in the state of Maharashtra from the 1st of April. Maharashtra State Electricity Board users can expect a 6% hike in both 2023-24 as well as 24-25. The company, in fact, has estimated a total revenue gap of about 67,000 odd crores on account of this price hike which the company has undertaken. Hike will be allowed owing to the shortfall in revenue that was impacting the company on account of COVID-19 restrictions. Apart from this, consumer activities activists in fact have opposed this move of rising prices by about 5 to 10%. Industry, however, says the tariff hike will make businesses uncompetitive. As far as other states are concerned, Karnataka has also hiked rates thrice in the last 18 months, and next revision is likely in the month of July. As far as Madhya Pradesh is concerned, DISCOMs have sought power hike to the tune of 3.2%, and in Tamil Nadu as well, revision is expected with effect from July, and hike could be anywhere between 12 to 52 odd %. So yes, electricity prices all set to rise, and it will hit our pockets.
All right, electricity bills set to rise and hit our pockets. Thank you for that detail, Ashesha. Now we'll move on. India's largest two-wheeler maker, Pawan Munjal, promoted Hero Motocorp is grooming a pool of internal talent in key functions to take on leadership roles in the future as a part of a well-laid-out succession plan at the global auto major. here is looking at the nurturing talent within the company instead of looking elsewhere to fill in leadership positions going ahead. Hero MotoCorp on Thursday announced the appointment of Niranjan Gupta as the new CEO of the company effective from 1st of May 2023. Now, Gupta is currently the Chief Financial Officer and Head Strategy and M&A at the company. Now, Pawan Munjal will continue as the Executive Chairman and whole-time Director on the board.
Right, and among other stocks that will be in focus, defense majors BHEL and HAL are two of those. A check on both of their financials in FY23. BHEL's revenues were up 2% in the final quarter of FY23, while that versus the FY23 revenue saw a robust uptick of 15% for HAL at 17,300 crores. Now, company received new orders worth 20,200 crore, while their order book stood at 60,500 crore. Meanwhile, HUL for FY23 revenues were up 8% on an annualized basis, and company received orders worth 26,000 crore, while their order book stood at 82,000 crore.
And well, moving on, let's take a quick look at India's aviation data also for the month of March. A 10% month-on-month uptick in the air traffic. That figure has come in at 130 lakh passengers. Now, marginal decline witnessed in the month gone by. International air traffic went up 13% to 29.7 lakh passengers. That's the data that is coming in on the aviation sector.
Well, yes. Moving quickly on, we have Mahesh Nandurkar, who is the head of research and MD at Jefferies, and he believes that banks have seen a heavy FII sell in the last few years. He believes that foreign flows should turn positive soon. Let's listen into his views.
We are not going to be seeing like supernormal returns, but clearly what has changed over the last, I would say a few months, or let's say like 1 year or so, is that the central bankers all over the world have kind of stopped printing money. They've started adjusting their balance sheet. The rates have gone up. So in many ways, the easy environment for equity investments that we had seen over, let's say, from 2010 to 2020 isn't really there anymore. So we have to be cognizant, of that fact. Yeah, but having said that, I think now seems to be the time to start buying.
I was just wondering what's going to be the construct of the market, say, in the next 6 months to come? Because what one has seen is that there's been a stark underperformance from not just blue chips, but individual sectors, high weightage. And I'm not talking about the Adani group here, but I'm talking about something as large as banks and something as key as banks. Where do you think the leadership and underperformance is going to come in from, say, in the next 6 to 12 months?
See, what has happened with the banking sector is also that, in general, over the last 1.5 years, we've seen heavy selling from foreign institutional investors. And we've seen selling almost to the tune of around $30 billion, right? And what we've seen historically also is that when the foreign institutional investors sell, the banking sector typically ends up underperforming. But my sense now is that the foreign investor positioning in India is very, very light. In fact, I will go to the extent that to say that it is at the lightest level that I have ever seen in the last 10 years. Several large funds that we interact with are underweight on India, and the reason for them to go underweight over the last few quarters has been the extreme valuations. But as I mentioned, those things are correcting as we speak. So my sense is that from here on, the foreign flows should be on the positive side and not on the negative side. And that should primarily be one of the driving forces for the banking and financial sector, which is also incidentally the sector where the valuations have corrected quite significantly. They are trading at much below their last 10-year averages. So looks pretty attractive. Since you asked the question about the construct of the market, I clearly believe that it's the domestic cyclicals that should do better, which includes banks, NBFCs. I would also say, industrials. In the near term, I would also be looking to own consumer staples as well. I think the concerns on monsoon being weak and therefore rural demand getting impacted, etc., to my mind, are overdone. We have to keep in mind that rural is not agriculture and vice versa. Rural or the bottom of the pyramid is far bigger than agriculture. I mean, agri GDP is about 16-17% of total. Rural is about 40-45%. So there is much more to the bottom of the pyramid demand than agriculture. And I think the non-agri segment, is basically driven by the other services, the construction services, construction sector seem pretty strong.
All right, moving on then. Piramal Pharma is going to complete its rights issue in Q2 FY24 and the draft letter has already been filed with SEBI. My colleague Sharad is here to tell us more about it. Take it over, Sharad.
Well, yes, a strong rights issue coming in of more than 1,000 crores from Piramal Pharma, and the important thing is the draft letter has been actually filed with SEBI and is expected to be completed in the second quarter of FY24. Now, looking at the stock, it has been actually listed after the demerger at almost 200 rupees per share on the bourses. But if we see from the listing itself, it is down almost 66%, and this year, if we see, the stock is down almost 40%. So the important triggers for the fall, this includes, of course, the price discovery coming in after the demerger and, of course, weak set of quarterly numbers coming for the third quarter. And lastly, there has been a very lukewarm reception when it comes to domestic institutions actually increasing stake in the company. Apart from that, there are some recent triggers which might actually augur well for the company, at least in the medium to long term, which includes lower freight rates, which actually will aid the margin expansion. And apart from this, also the company recently received zero observations from its Digwal facility. The brokerages are stating that the valuations have turned attractive, and even Jeffrey stated in a note that from the second half of FY24, the CDMO business will turn actually on a positive note. And do remember, almost 60% of sale comes from the CDMO business. Now, also there was a guidance which was given by the company to ET now. They have stated that they are going for a long-term growth of 15% in the top line and expecting EBITDA to go up to 25 to 28% in the next 3 to 5 years. By FY25, they are aiming a 10,000 crore revenue, and we did check what the analysts are also stating going ahead. And out of the 5 analysts tracking the stock, all of them have a buy rating, and they've given a 12-month combined target price of 116 rupees per share. Now that indicates almost a 70% return potential from the current market prices.
Thanks for that, Sharad. Now, one piece, of course, as we enter April is that we get a look at what the March auto sales data looks like. It was a mixed bag from what we see. But Ashesha is here with the fine print. Break it down. Ashesha, good morning.
Well, yes, auto sales numbers for the month of March have been quite strong. Passenger vehicle segment sales have been steady, but commercial vehicle segment has been a clear outperformer this month. This one, of course, is because of the strong underlying demand that we are seeing in the commercial vehicle segment, and it is also because of pre-buying seen before RDE norm price hike kicks in from the 1st of April. As far as tractor sales are concerned, we have seen steady performance as far as tractor segment is concerned, but they've been marginally impacted because of unseasonal rainfall that we have seen in the month gone by. As far as two-wheeler segment is concerned, sales have been better than estimates for Hero Motocorp as well as TVS Motors. However, exports for two-wheeler segment has been impacted in the month of March as well. As far as the full year performance is concerned, FY23 has been a record year in terms of sales for several companies: Maruti Suzuki, Eicher, Royal Enfield and Tata Motors as far as their passenger vehicle segment is concerned. Let's also move on to what management commentary looks like. First up, we'll talk about Maruti, where they've recorded highest ever monthly exports of 30,000 units. They say for FY23 as well, they've posted its highest ever total sales. As far as Tata Motors commercial vehicle segment is concerned, a higher replacement demand, advance buying that we're seeing in anticipation of price hikes with effect from 1st of April is what has led to strong numbers for the month of March. However, if we look at the passenger vehicle segment of Tata Motors, FY23 has set a record year in terms of sales volume for the passenger vehicle segment, and management commentary also is quite robust. They say they expect the demand for personal vehicles to remain robust in FY24 as well. Let's move on to TVS exports then, where TVS Motors then, where exports have seen a decline of about 32% in the month of March on a year-on-year basis. Moving on to escorts then, where despite the festive demand that we have seen in March, company says retail sales were impacted due to unseasonal rainfall and crop damage in certain regions. However, they say they expect similar momentum to continue across geographies in the coming quarter. So that's as far as auto sales is concerned, largely strong, but two-wheeler exports were impacted this month.
Thanks for that, Ashesha. Let me quickly move on, try and break down how Asian markets are doing. Now let's first look at what US futures are doing. Largely flat or slightly negative is how I would evaluate it. We're seeing the S&P futures which are down around 1/3%, and we're seeing the Nasdaq futures down around 2/3%. But where Asian markets are concerned, led by the cheer of the close of global markets on Friday, Asian markets are largely in the green. We're seeing the Kospi marginally lower, largely flat, down 1/10%. We're also seeing the Hang Seng, which is down around 1/4%. But other than that, we're seeing green across the board. We're seeing the ASX 200, which is the Australian index, which is up a solid 3/4%. We're seeing the Nikkei, which is up around 0.5% as well. And we're seeing the Shanghai in the green, holding on to very marginal gains, but up around 1/5%. SGX Nifty also largely flat, but in the green nonetheless. So a positive bias coming across markets.
And well, that's the handover from the Asian markets. But with that, we're completely out of time on this one. Thank you so much for tuning in. Don't go anywhere. The markets will take the action forward.